What I'm about to say might be a little triggering. It's going to be pretty triggering because we're talking about trigger rates. What exactly are trigger rates? When do they happen? And what can you do if you find yourself in a situation where you're up against a trigger rate? First off, what is a trigger rate? It's good to know that not all variable rate mortgages are the same. There's actually two different types. We've got an adjustable rate mortgage, and then we've got your static mortgages, so a fixed payment variable rate mortgage. Those are the ones that are actually going to hit a trigger rate, or possibly could. Now, fixed mortgages and adjustable rate mortgages, where that monthly payment goes up as the variable interest rate goes up, those aren't affected. But for those of you that might have a fixed variable rate payment, listen up. So in a rapidly rising interest rate environment like the one we've seen over the last year, anyone that's had a fixed variable rate mortgage has had a lot of their principal being reduced on that payment. Some people might be paying pure interest, and that's when you get into a little bit of trouble. That's when the trigger rate actually hits. What that means is your entire payment every month or bi-weekly or however you're set up is going towards just paying the interest. And that puts you in a very difficult predicament because essentially you're not paying down any of your principal, and it throws your amortization out of whack. So why is this a big deal? Let's reverse a little bit. Over the last few years, a lot of people have been taking advantage of these really low variable rate mortgages. But as we can see over the last year, we've had like a 350 basis point increase on variable rates. And as those rates went up, anyone that's paying a static payment on the variable rate has had some issues, and they're starting to rear their ugly head right now. In fact, earlier this year, almost half of Canadians were choosing a variable rate mortgage. That means that variable rate mortgages account for almost a third of all mortgages in Canada right now. That's up from 20% in 2019. And of those that have variable rate mortgages, half of them have hit their trigger rate or are about to hit their trigger rate. All right, so now that we know what the trigger rate is, what steps can you take? If you're in a situation where you're starting to see that principal amount erode, in fact, if you just log in online and take a look at your mortgage statement, you'll see what your amortization is like and how much is going towards it. I would suggest preemptively reaching out to your lender to see what options are available. So if you have the ability, being able to increase your payment amount immediately is going to definitely help. That's going to reduce the amount that's going towards that interest and put you back on track. This also applies to anyone that's already hit their trigger rate. Talk to your lender, figure out what that payment is to get you back on track. Keep in mind, tomorrow we're actually expecting another 50 basis point increase. Could be higher, could be a little bit lower, but it's definitely going to be increasing. For anyone that's kind of hitting or getting close to the top, keep an eye on this. And more importantly, if you have a renewal coming up, the bank is going to want you to get your amortization back in check. So what does that mean? Well, it means that if you are paying pretty much all interest on your variable rate mortgage, you're going to have to make a lump sum payment. And you'd want to contact your lender now to figure out how much you have to pay them on renewal, because you don't want that surprise if you've got a renewal happening shortly. If you need any help or suggestions, or you want to talk strategy on this, hit me up. The more you know.